Hello, and welcome to our presentation of the 125 Cafeteria Plan. This program has been brought to you by your employer and Professional Benefit Services. By now, you should have received a packet of information from your employer, and it would be great to have that on hand, as I'll refer to that often throughout the presentation. Income taxes. Everybody pays them, and most agree they're too high. Most of us pay somewhere between 20 and 30% in income taxes. For a person who's making an annual salary of $20,000, that means you'll pay $4,000 to $6,000 in taxes. This program, the Cafeteria Plan, will allow you to avoid paying tax on a portion of your income. Let's take a look at an example of how this program can save you money. In our example, we're starting with a gross salary of $1,600 a month. That full $1,600 is taxable, and if we pay federal and state income taxes at 17%, that's $277.60 that would go to those taxes. In addition, you pay 7.65% in Social Security tax. That's an additional $122.40 coming out in taxes. Now, let's suppose that you have dollars withheld out of your pay to have yourself, your spouse, or dependents covered under your group employer-sponsored health insurance program. And then in addition to that, you're paying $60 a month towards prescriptions or co-payments, out-of-pocket medical, dental, vision kinds of expenses. That leaves you with spendable income of $1,029.40. Now, with the Cafeteria Plan, we start off with the same $1,600 in gross salary, only now we get to subtract out that premium that we're having deducted out of our pay on a before-tax basis. We also withhold that $60 pre-tax through the Cafeteria Plan, which leaves us a taxable income of $1,429.40. Again, we withhold state and federal taxes at 17%, and now we're paying $248 in taxes, and withhold the same Social Security taxes at 7.65%, and now we've paid $109.35 in Social Security tax, which is less than $122.40 we paid previously, for a total spendable income of $1,072.05. The difference is that we've saved $42.65 per month, which is over $500 in a year. So now the tax savings is great, but really your interest in the program will be determined by the kinds of things that you'll be able to be reimbursed for out of the program. And those fall into three basic categories. And the first one is health insurance premiums. If you have any money withheld out of your pay to have yourself, your spouse, or your dependents covered under your employer's group health insurance program, that money can be deducted pre-tax. The second category is dependent care expenses. Now, usually we mean child care, and that would be for the care of any of the children while you and your spouse are gainfully employed. That can also mean for elder care if you have a parent that's dependent upon you. And the third account is what the tax code calls a flexible spending account. In this account, you'll be able to set aside money for a variety of different out-of-pocket, medical, dental, and vision care expenses. In your packet is a list which includes such common items as deductibles, prescription drugs, chiropractic fees, dental and vision needs, as well as certain over-the-counter medications and supplies. These items can include such common things as medicines for allergies, for colds, and flus. Let's suppose that I'm covered under a group insurance program at work, but my spouse is covered separately through her work, and she has the kids covered under her program. If they have any deductibles that they're satisfying under their program or co-pays, those types of things can be included in this pot of money as well. And remember, these are expenses that not only you incur, but your spouse or dependents, even if they're covered under a different insurance program. Now let's talk about the advantages of the Cafeteria Plan. First of all, there's the tax savings. Most of us will save 20 to 30% off the expenses that we run through these plans. Second, you can customize your own plan. You determine your needs, and then you set aside a monthly amount to cover those needs that come up throughout the year. And third, the Cafeteria Plan helps you budget for the year. You set aside a small amount out of your paycheck every month, and you've got this large pot of money to draw from when you have these expenses incurred. Now that we've talked over the great benefits to this plan, let's discuss the possible cautions to participating in the program. First, Whatever you say you're going to defer into the plan is the amount that you have to defer each and every month. So once I sign up at the beginning of the year to set aside a certain amount of money, that amount of money has to be withheld each and every month throughout the plan year. The only time you're allowed to change is if you have a significant family event, and that's listed in the packet as a birth, death, divorce, marriage, adoption, spouse either quitting work or getting work. Outside of those options, you're going to be locked into what you said you're going to do for the plan year. Now, you'll have to check with your employer to find out what your plan year is. Typically, it's 12 months. The second caution for you to participate in the program is that if you over-defer, if you put away more money than you can possibly use in a year, you'll lose those funds. This is not something that your employer or professional benefits chose. This is what the IRS says has to happen. So the key to the program is to make sure that you don't over-defer. Make sure that you can use all the money that you set aside in the program. Now that you have a basic understanding of the program and how it works, let's look at the enrollment form and how to sign up for the program. Please take a look at the enrollment form included in your packet. To begin, you need to fill in your name at the top of the form. Next, check the box yes that you're enrolling in the plan for this year, or no, you're not enrolling for this plan year. Remember, if you choose not to enroll in the plan, you will be locked out until the next plan year begins. Proceed to the first line that says health insurance premiums. Fill in any monthly amount that is coming out of your paycheck that goes to have you, your spouse, or your dependents covered on your employer's health insurance plan. For example, if my premiums are $250 a month and my employer pays $100 of that, I would pay the other $150. $150 goes on this line for health insurance premiums. If you do not pay health insurance premiums through your employer, please put in a 0 in this column. The second line is for supplemental insurance premiums. This includes accident and cancer plans. The third line is marked anticipated health expenses. This is the amount you want to contribute over the plan year. This is where you would list your dollars for all those medical, dental, vision kinds of expenses that come up through the year. For example, let's say in the following 12 months, you have a $600 insurance deductible. Your spouse needs glasses costing $400, and the children have allergy medicine over the summer at a cost of $200. Your total expenses are $1,200. Line 4 is for dependent care expenses. Remember, you cannot defer more than $5,000 per year. Also, you cannot run dollars through the cafeteria plan and take them as a dependent care tax credit at year end. Additionally, your employer may be contributing to the program, and if they are, you will need to indicate where you want the dollars to go in this column. Please read the remainder of the information on the enrollment form and then sign and date where indicated at the bottom. Please turn this form into your employer. Even if you do not wish to participate in this plan, please sign and date the form anyway and turn it into your employer. This gives them the record that you were given the opportunity to participate. And now let's go to the claims form. This is the form you'll use to get money back out of the plan. Indicate the amount of money you're claiming and out of which account you want it to come, either medical, dependent care, or these supplemental premiums. Sign and date the form and attach a copy of a bill or receipt that you're using to justify the expense. And here's an example of a receipt. Medical receipts must include 4 things. 1, a date of service. 2, your name, your spouse, or an eligible dependent's name who received the service. 3, the cost incurred. And 4, that it is an obvious medical provider. Claims without receipts will not be processed, and please make sure your company name is also included on the claims form. In addition, your employer may offer a debit card to access these accounts. Please check with them for more information. Our hope is that this short video presentation has provided you with some valuable information on this new benefit offered through your employer. You know, there's not too many ways to save tax dollars these days. This is the last program of its kind. Please use it to its fullest advantage. And feel free, if you have any questions, to contact us.